So today we're not talking about stocks, we're not talking about markets, we're talking about specifically T3 proprietary trading. First, I have to do a pretty quick disclosure here because I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. Not sure how many of you know me very well, but I have been with T3 since 2010. I've been licensed with T3 since 2011. I've been running my own trading desk at T3 since 2013. So now let me take a step back. Let me tell you guys my story a little bit. Just let's get into depth, just so that you understand me better. And just by knowing my story, it'll actually make you understand T3 better. I started my career in 2008 trading. Heck of a time to get started in the industry. That's when I finished school. I went to NYU in Manhattan. I grew up in Long Island. Graduated, always wanted to be involved in trading, specifically finance, and you couldn't get a job if you graduated in 2008. Lehman Brothers just went under. I was competing with people who had 30 years of experience for entry-level jobs, you know, just because of what the environment was like. I honestly feel like I got a little bit lucky. Because of an internship I had, I was able to land a job as a sales trader in 08 and 09. I worked for a company that basically made markets in distressed and liquid assets. Did that for a couple of years. It was a great learning experience, but it's not what I wanted to do for me as my career. Basically, as a sales trader, you're a middleman. So I was a middleman for institutional buyers and sellers of basically illiquid and distressed assets resulting from the financial crisis. Again, great experience, but I wanted to be a decision maker. Long story short, I got out of sales trading and I moved specifically into proprietary trading. That's when I joined T3 in 2010. And I wanted to do this because I wanted to be the one who was the decision maker. I wanted to, and this is what we do as professional prop traders, I wanted to study the market for myself, decide what I want to be involved in, how I'm managing risk, how I'm managing reward. And it was a big learning experience for me. I thought I knew a lot about trading in markets when I first started with T3. The truth of the matter is I really didn't. Everything I've learned about trading, I have learned at T3 over the course of the last decade plus. And the one thing I did understand from the beginning of my trading career was that the key to success in this business is risk and money management. So I made rules for myself. I was very disciplined. Honestly, I was probably more disciplined with my risk management rules when I was a new trader because I knew I didn't know anything else than I am at this point in my career. Basically just set these rules for myself, money management, risk management, followed them. It enabled me to make smaller amounts of money. And I worked on adding scale behind that as I learned more and as I became more experienced. Eventually in 2013, T3 gave me the opportunity to start my own trading desk. So I've been working with and managing professional traders here at T3 for over 7 years now. It basically started as me and a couple people. And over the course of the last 7 years, I've been able to develop it into what has become T3's largest individual group of professional traders. And I've mentored well over 100 professional traders for the company over the course of the last 7 years that I've been running a trading desk. That's gone really well. Again, it started as me and a couple of basically other entry-level people that I brought into to T3. And now I have an awesome group of traders that I've been able to develop 7, 8 years later. Some of these guys are former fund managers, former floor traders, former pit traders, guys with decades, and gals with decades of experience, and others who are a little bit more entry level still and just getting their career started, which is fine as well. And the main reason that I was able to develop my group to what it is now is because I created a lot of infrastructure for the training and development of the people that I work with. So every day I conduct a morning meeting at 9 a.m. Eastern, an afternoon meeting at 10 after 4. There's optional training programs when people first get started. Everyone gets access to the virtual trading floor that I run, which is called the Pro Desk. So it's a really great but unique environment that we're running in there. But again, for today's purposes, we're primarily going to be speaking about proprietary trading, T3, whether this is right for you. My personal life, been a big martial artist. I've been practicing martial arts for over 30 years. I actually used to fight professionally, professional kickboxer for about a decade. I had 12-round world title fights. I fought people from around the world. I won 2 world titles myself in 2 different weight classes, a WKA and an ISK world title, if anybody's really familiar with the sport. So martial arts has always been a big part of my life. I'm also a really big skier. Since COVID hit and our Manhattan office closed, I typically run our headquarter office, the trading floor myself. It's really myself and Scott Rudler. We run the floor together. But since the office closed and we have everybody working remotely right now because of COVID, I've used this as an opportunity to travel around the country, get a lot of skiing in. So what we're going to cover today is we're going to talk about the trading industry right now, how things are going. We're going to talk about the unique advantages of prop trading. We're going to talk about who succeeds in prop trading and maybe a little bit on who doesn't succeed in prop trading, and where T3 Trading Group is going and how you can how you can potentially become a professional trader here with the company. Despite what you've heard, trading is not easy. And this is actually something that's really important to me. Trading is a really difficult business. Not everyone who pursues it becomes successful. I can tell you from experience, I've been a professional trader for over a decade. Obviously, I've done well enough to be able to do this for over a decade, but I have had my share of difficulties over the years. I've had my share of trading slumps over the years. And honestly, I've learned from all those. And it's part of what has made me the trader that I am today. I've also traded through a lot of different market environments. Certain market environments are easier to make money in than others. There's no doubt about that. 2015, such a hard year. The market basically went sideways almost all year. There was very little volatility. There was very little direction. And as a professional trader, what you really need is volatility or direction, or ideally a combination of both, to really make good, consistent profits. That was a difficult year. Other years, 2013, awesome. S&P trended up 33% on the year. There was decent volatility. 2020, awesome. Last year was incredible. So far, that's carried over into 2021 as well. Everything that occurred, I know that 2020 was a difficult year for a lot of people for personal reasons, but from the perspective of trading, the sell-off that we had from the coronavirus, followed by the subsequent rally, all the volatility in between, that's like an awesome trading environment. It's really ideal. I think maybe we'll talk about that a little bit more. So what's going on in the industry right now? Well, obviously, we've got Robinhood, which basically started the trend of commission-free trading. I say that in air quotes because, you know, you trade commission-free with some of these brokers, but it doesn't mean it's for free, because obviously they need to make money somehow. They kind of gamified trading a little bit, for better and for worse. Then we had Wall Street bets, right? We had what was going on with Reddit is honestly one of the most incredible things I've ever seen over the course of my career. GameStop, AMC, BlackBerry, Bed Bath & Beyond, all these stocks. I have a position in Bed Bath & Beyond right now, again, just for disclosure. But all these stocks that went completely nuts as a result of Reddit. All that breeds tremendous opportunity for us. Then silver had that big uptick. Silver, this is one that I was involved in initially. You know, it reached a point with this Wall Street bets thing where it was like, if you can't beat them, join them. Because the moves that were coming were so quick. So we were able to get into, or at least I was able to get into silver via SLV on, I think, pre-market on January 28th. Caught a really big 2-day move there where I was able to book some profit into that. Then you had cannabis stocks going crazy. Tilray's been going nuts. Sundial, I bought the Sundial at 80 cents. And that was, you know, I think it was 80 cents. It was about there. It was definitely below $1. And this was an insane move. We just had Tilray report earnings. So trading on earnings today. Again, not trying to talk too much about stock. It's actually hard for me. I just love markets. I love talking about trading so much. So I'm trying to save the trading talk for the next 6 trading sessions. But you know, again, a little tough for me sometimes. Then we had Bitcoin, Elon Musk, Tesla coming in, buying Bitcoin. Now, when I'm trading Tesla, I got to be paying attention to the price of Bitcoin, because Tesla moves with the price of Bitcoin now that they've made this purchase, which is also crazy. You even had this Dogecoin, heard some people call it dog coin, that had this crazy move. And Elon Musk is now maybe talking about starting even his own coin. So it's just been an incredible year of speculation. Arguably, there's little bubbles that have appeared in different spots throughout the market. And then, of course, not to mention COVID, right? What that did to markets and the subsequent stimulus that it's led to, and what the Fed's doing right now, and the fiscal stimulus from the government, and how all of this is intertwining to affect the markets. Politics. We had an election last year. Everyone has their own political opinions. I try not to talk about that. When I have to talk about politics, I want to be talking about specifically how this affects the market, what is the probability of certain things happening, and what is the potential price action that can come from it. The market sold off into the election. We viewed that as a buying opportunity just by a calculation of probability and risk versus reward. What was the probability of it being a contested election where there's no winner for months versus we know who the winner is. Markets hate uncertainty, and that could lead to a big bid for the market. And guess what? That's exactly what happened, and we were ready for that. Earnings season, I love earnings season, 4 times a year, creating a lot of volatility, creating a lot of movements for individual stocks. And what we're seeing right now, I've been talking about this for months. Over the course of it's almost 6 months now, I'm seeing stocks move like I've never seen them move in my entire career. I've been doing this professionally as a prop trader since basically 2010, was a sales trader before that. I've never seen markets doing what they're doing with some of these individual stocks right now. We're seeing some of these names moving 100%, 200%, 500% more over the course of sometimes a couple weeks or a couple months. And there are just countless examples from Palantir to Fuel Cell to Plug that have just given these incredible moves. Then you got we were talking about crypto before. You got the crypto stocks, right? Riot, Mara, and SOS, and the movements that those things have been given. We're literally talking about stocks moving hundreds of percent in these short period of times. I'm old enough to remember the tech bubble in the late 90s into 2000. Wasn't old enough to trade it at that point, but I remember, walking into the martial arts dojo when I was 15 years old, and the head sensei doesn't even want to talk about martial arts. He just wants to talk about the stock market. I remember that. There are some similarities now, but there's also some big differences. But we are seeing stocks. What's the historic average return of the S&P 500? 7%, 8%, something like that. When you think about it like that, and then you think about how these stocks are moving hundreds of percent at a time, well, the point is that there's a lot of money to be made. Potentially also a lot of money to lose if you don't have risk management in place. And, if you're talking about systemic risk to your own trading, well, the stuff that was just going on a couple weeks ago, I'm not going to mention any individual brokers, but the stuff that was just going on a couple weeks ago from some of these brokers is deplorable. I can't tell you how many people I've spoken to over the course of the last couple of weeks who are reaching out to me to get involved in T3 because their broker, the platform's not running properly. It's extremely laggy, especially in the beginning of the day. I spoke to one guy who was like, I buy positions and I sell positions before the system even tells me that I bought the position. Then you had this nonsense of their stock restrictions. Look, I was telling people GameStop doesn't belong at $350. Doesn't belong at, there's a pre-market high one day at 520, 512, something like that. GameStop doesn't belong at those prices. Obviously there was an institutional short squeeze that came in that created that. And look, if you want to buy GameStop at $350 because you want to be part of the movement, you should have the right to be able to do that. I don't want to do that, but you should have the right to be able to do that. So then you had all the brokers coming in and restricting access to a lot of these stocks. Systems were just not working right. People are in positions that they can't get out of them. I experienced zero problems. My trading system works from 4 a.m. in the morning Eastern time till 8 p.m. On my other screen here, I still have my stock positions that I'm swinging open, honestly keeping an eye on them right now, even as I'm doing this webinar, make sure nothing happens, because technically I can keep trading till 8 p.m., the post-market trading. And I had zero lag, I had zero downtime, I didn't have any restrictions, I don't believe. So if you are entering into a position in something that's volatile, that's moving hundreds of percent at a time, and now you can't exit that position or you can't manage it properly, to me, that is just completely unacceptable. Here's an SEC statement on Robinhood. Robinhood provided inferior trade prices that in aggregate deprived customers of $34.1 million, even after taking into account the savings from not paying a commission. And I believe that came with a nice SEC fine along with it. So again, you might be trading commission free, but you're not trading for free. And I estimate that if you are trading through a commission-free broker, that you're actually paying somewhere around $15 per 1,000 shares that you trade. But you don't see that as an upfront commission cost anymore. It becomes a performance drag, right? Because there is no commission, but it's not free. You just don't have access to the true market. For myself, when I'm trading, I have access to the true market. I choose my own routing. If I want to place my order on the New York Stock Exchange, I place my order on the New York Stock Exchange by routing to it. I can do the same thing with NASDAQ, ARCA, or any of the other major exchanges or ECNs. And we're going to talk about this in a bit, but having that direct market access, a lot of benefits to it. And if your platform fails when you have real money on the line, that's not good. Even I can't remember the last time that T3 had an outage, but even if we did, or I was on the run, or maybe I lose power to my own home, we have a trade support team. I can call into my trade support team and I can say, hey, can you get me out of XYZ stock? And they'll just exit that position for me on the spot. Okay, so let's talk about professional proprietary trading. What is it? Basically, prop traders use the capital of the firm, in this case, use T3's capital in order to actually trade. So it allows for basically very significant amounts of leverage because you have advantage of, in this case, T3's entire capital base. And then the way that the firm is going to make money, one of the ways in which the firm makes money is they keep a percentage of that trader's profits. So basically, you're getting capital access. We'll talk about this a little bit here in a minute, but it's very typical that we will give our traders 20 times their account and capital access, right? So someone that's got a $50,000 account, we can allocate you $1 million to actually do your trading with on a day-to-day basis. This opens you up to all-time types of potential trading strategies that you can't necessarily do in a retail account without that capital access. And most professional prop traders do this as their full-time living. Not everyone, but probably 95%, and that's an estimate, it's probably actually a little bit higher, but probably 95% of the professional prop traders on my team, this is what they do full-time. Got a couple other guys who have law practices, but they are able to kind of run their own businesses there as well, and they can focus on their trading at the appropriate times. Basic requirements for prop trading: you have to become licensed. So you have to pass an SIE, Security Industry Essentials, and a Series 57 examination. That's probably the biggest pain, I think, to getting started as a professional trader. And again, if that doesn't interest you, I'm not here to talk about retail accounts today, but T3 also does have retail accounts. If you have zero interest in becoming licensed, you could speak to me about a retail account. You also have to pass a background check. You cannot be a convicted felon or someone who has declared bankruptcy in the last couple of years and join the company. And you have to be a U.S. resident with some sort of U.S. work authorization. The advantages of being a prop trader. First and foremost is capital access. I just touched on this a couple minutes ago. So typically, and it varies a little bit based on experience, based on your approach, the strategies that you're being implemented, that you're planning on implementing. But typically, we will provide capital access, buying power, at 20 times your account for day trading and 8 times for overnight positions. So someone who has a $25,000 account, we can give them access to $500,000 for day trading, $200,000 for overnight positions. And you can go much bigger than 25,000 also. You could put in a $1 million account with us and we could discuss giving you access to $20 million for day trading and $8 million for overnight positions. Whereas in a retail account, you're restricted by Reg T margin. So that's FINRA regulation, Reg T, that limits the amount of leverage that can be accessed by a retail trader. Typically, that is 4 times for day trading, 2 times for overnight positions. There's such thing as being able to get a portfolio margin account if you're a larger retail trader, where that number can be increased a little bit. But again, the number one advantage is this capital access. Without a doubt, we might talk about this in a minute in the slides here also, that capital access is a double-edged sword. And that's always something I want to be honest about. If you have a $50,000 account, you have $1 million in access, and you put $1 million all into one position, and that thing goes through the roof, you're making a lot of money in a short period of time. But the opposite is also true. If you load up in a position and that position goes against you, well, guess what? Being a prop trader is a fantastic way to lose a lot of money in a short period of time. What does all this mean? It means that if you are a professional prop trader, it makes risk management even more important than it would be otherwise. I tell my professional traders that I work with all the time. So first of all, literally every morning meeting that I do ends in a warning about risk management. And I tell my team all the time, what I'm doing as a professional trader is probably 85% risk management and 15% reward maximization. I need to know exactly how much I stand to lose before I enter into any position. And if you don't have that in place, you're potentially putting yourself in for a world of hurt. So I guess here's an example. If I wanted to buy 1,000 shares of AMD as a $90 stock, it would be $90,000 to be able to buy that position. With a prop account, I basically only need to have $4,500 in the account to be able to do that. In a retail account, I might need $45,000 in the account to do that. And here is where it comes in strategically. So what I'm doing as a professional trader, this math of figuring how many dollars it costs to buy the stock, I'm really never doing that math. The math that I'm always doing is, where's my stop loss versus how many shares do I have? That's the equation on how many dollars I'm actually risking in the trade, right? So in this case, if I bought 1,000 shares of AMD at $90, and maybe I'm doing this as some sort of scalping breakout type trade where I'm only risking 20 cents in it, I'm risking $200. That's the math I have to pay attention to. I don't care if it costs me $90,000 to buy the stock or $50,000 to buy the stock. I don't even pay attention to that. I just press the button and I buy my 1,000 shares. The math I'm doing, again, risk management. How much am I losing if I'm wrong? Now think about the flip side of this. If this trade works, this trade starts going, AMD's had an incredible move. I remember trading AMD when it was like a $20-something stock. Now we're talking about it as a $90 stock. Well, you buy that 1,000 shares and you catch that move, the reward potential there, and this is where risk reward comes in, is incredible. So in other words, it can improve your ability to have risk reward in a pretty tremendous way. Options. So first of all, T3, we've got equities, we've got equity options, we've got futures trading, we've got options on futures. Personally, I focus on equities, as does most of my team. I do have some guys in there and gals who trade options as well. The thing about options trading is most of the people that I speak with who trade options in a retail account, they're directional traders and they use options for basically for capital access, for leverage. My thought process has always been, and I'm really primarily a directional trader myself, my thought process has always been, why do I want to trade options, which are a less liquid product and subject to time decay for capital access, when I already have as much capital access as I could ever want? That's why I don't do it. With that said, it makes sense for specific professional traders for specific reasons. If you're implementing any sort of complex option strategy, straddles, calendars, spreads, well, you want to use options for that. And again, we'll give you leverage on options as well. usually start to leverage a little bit smaller for options traders just because we want to get comfortable with your strategies. The only thing that we do not allow for, basically strategically, pretty much the only thing that we do not allow for is the naked selling of options in any way. Or I have, some of the traders who are implementing some longer term swing positions. Sometimes they'll sell some covered calls for hedging purposes and, for some cash flow. But for the most part, this is specifically why I focus on equities. So we can talk about all those things. Number 2, direct market access. Another thing I started to highlight a little earlier. There are advantages and disadvantages to understanding all of the ins and outs of direct market access and routing. And honestly, routing is a topic. I speak to some people who are professionals for sometimes, 10, 20 years, who know surprisingly little on routing. And this is something that I honestly know a decent amount about. And it's something that I teach my team about on a regular basis. I choose where I want to place my orders because I have direct market access. I choose to place my bid on NYSE, place my offer on ARCA, route my market orders through EdgeA, and the maker-taker system is in effect. I get paid for my limit orders. I put in an order on NASDAQ, and if I'm putting a 1,000 share bid and that bid gets hit, I think NASDAQ pays me $1.90 for putting that order in. So I actually can get paid for that order flow. I oftentimes at the end of a given month will look back at my trading account and actually have made money from the exchanges for how I choose to route those orders. And again, it's something that I teach to the traders that I work with. So it's not unusual for me to honestly trade in excess of 1 million shares a month. And honestly, breaking down these numbers in this slide here is really conservative. If you route properly, it can honestly save you, a half penny per share if we're being conservative. This says let's call it a quarter penny to be conservative. So if I trade 1 million shares in a month, which is realistic, and I'm saving a quarter penny on every transaction by understanding routing, that's $2,500 a month in P&L. And again, this is honestly conservative. It might even be double that, but $2,500 a month or $30,000 a year, and that could be a mortgage and car payment or whatever. The ECN rebates, I was already talking about that. I get paid for my bids and my offers for my limit orders. So I have direct market access. I do have a commission cost, but learning to understand routing can really save you money. And again, here, the SEC statements, I think they fined Robinhood over this because of inferior trading prices to deprive customers of $34.1 million. I'm curious to know how they came up with that number, actually. Advantage number 3, lifestyle flexibility. All right, I talked about this already. I've had an incredible year since we shut down the office. And as much as I miss the camaraderie that we had on the trading floor in the office, and I want to have that back, I don't want to have it back until the powder is gone at Jackson Hole. When the pandemic first hit, so I've lived in Manhattan since 2004. I live in the East Village. I live in it's funny, the locals here in Idaho, they laugh when I meet somebody and I tell them about it because there's so much space here. The house I'm staying at right now is like 7 acres of property with a river going through it, beautiful views of the mountains, and we're getting all this snow. In New York City, I live in like a 350 square foot apartment in the East Village of Manhattan, and I love it. I've always viewed my apartment basically as the place where I go to sleep. And New York City is my kitchen and my dining room and kind of everything else. But let's go back to this. Trading is not easy, right? A lot of people pursue this business and they're not able to become successful at it. And that's despite the amount of work that T3 puts into every trader who joins the company. I put a tremendous amount of work into every trader who joins T3 because I want you to be successful. As a matter of fact, I am incentivized to make you successful as a trader. If you're successful, you're making money, you're making T3 money. This is a win-win scenario. Our incentives are in line. And it's not easy. I keep myself on New York hours. I actually have my clocks here in Idaho set to New York time. I did in California as well. I think I was waking up at 2:30, 3 a.m. every day when I was in California, local time. And I was going to bed at 7 p.m. every day. But because it's winter, it stays night for so long. I just told myself that I was on New York time and it didn't make a difference because it was nighttime anyway. But I do a lot of work every day, my research process, working with my traders, doing business development stuff that I do for T3 now, running the morning, afternoon meeting, and, getting on the phone with traders to help them when they need it. So I put in a lot of work, but I genuinely love what I do. I love talking about markets. I actually traded once, if anyone's familiar with Hunter Mountain in New York, I actually traded once from the parking lot of Hunter Mountain. Played hooky on like one of those half market days like Christmas Eve or something like that. Still wanted to trade the open, had a laptop, sat there in the parking lot of Hunter Mountain, traded the open, and then got on the lift and skied. So, again, I love the business, but it's definitely difficult. It's really challenging. And honestly, that's one of the things that's always attracted me to it as well. Prop trading, you get the capital access, you get direct market access, you get lifestyle flexibility. I would also throw training in here. Again, you're working with like-minded people and have access to a host of training and development for free as a professional trader at T3. Again, for free. I don't want to charge you for it. You can buy it if you want to. If you're trading a retail account and you don't want to become a prop trader, you can purchase access to my virtual trading floor or my training program or those things. But honestly, I'd rather give it to you for free and have you be a successful trader with me for the next decade. So there are some retail firms that can give you direct market access. And again, if I was trading in a retail account, that's what I would want to use. And T3, our retail accounts, is honestly one of them. But you don't get that capital access. And at most 9-to-5 jobs, look, I got a lot of friends who thought I was crazy for getting in this industry when I first got involved in it because they had the security of getting that bi-monthly paycheck for their employment. It's just not what I wanted. They also hate what they do. They come in, Monday's the worst day of the week, and Wednesday's hump day, and Friday's almost the weekend. For me, sometimes Friday's the worst day of the week. I'm trading really well. I don't want the weekend to come. I'm on point. My brain's on point. I don't want 2 days off to get rusty. I want to keep working on Saturday and Sunday, but unfortunately, they close the market. Anyway, so most 9-to-5 jobs are not going to be able to give you that flexibility. And honestly, most of the people who I know who are in finance who work those 9-to-5 jobs hate what they do. Who succeeds in prop trading? Maybe we talk a little bit about who doesn't. So, like I said before, anybody who ever tells you that all they've known is just trading is easy and you make money on everything that you do, they're lying to you. One of the things I'm really honest about in my virtual trading floor and the pro desk and running the meetings, I love to talk about my trades that fail as much as I love to talk about my trades that work. Because I am not a perfect trader. That's the goal, right? The goal is perfection, but this is not something that can be perfected. You can get really, really good, but there's always, like, I've been doing this, for a long time now, and I'm still learning new things on a regular basis. And I've had my share of losses. I have failed trades almost every day, definitely every week. I've had my share of slumps along the way that I've been able to come back from. And honestly, there's an art to coming back from a trading slump that can be really difficult. I've seen trading slumps kill traders, not literally, figuratively, because they don't make the adjustments necessary to come back from it. They don't size down properly. They don't figure out what they need to do differently for the new market environment that caused that slump. But if you're dedicated and you're passionate about it and you're competitive and disciplined, then you can be successful. And again, I really think that number one thing is discipline, because you have to have discipline with risk and money management. I tell it to the team all the time. We spend so much time analyzing charts and analyzing technicals and analyzing all that stuff. But what's more important than any of that is risk and money management. I really think that you can know almost nothing about actual technical analysis or actual fundamental analysis or actual trading. I think you can know almost nothing about that and still make money trading if you have an amazing strategy and discipline for risk and money management, especially as a professional trader. Like I said earlier, I tell my team all the time, what I'm doing as a professional trader, 85% risk management, 15% reward maximization. And people struggle on both sides of that. You know, the number one reason why traders fail, we talk a little bit about why they fail. The number one reason why traders fail is they fail to follow through with their own risk management game plan. And I always feel like it sounds so easy. It sounds so easy in the webinar, right? You make your rule, you follow your rule. But the thing about markets is it will do everything it possibly can to mess with your psychology. How many people here have bought a stock, gotten stopped out at the bottom, and then it starts going up rapidly from right where you took your loss? I'm raising both my hands because it's happened to me so many times. Or shorted a stock, it goes up, it stops you out, and then crashes, and you took a loss on something that worked perfectly. It's happened to me so many times. Did you do the right thing or the wrong thing? You did the right thing. It is always the right thing if you have an appropriate game plan that breeds consistent profitability to get stopped out, even if you get stopped out at the absolute bottom tick and then that trade works. Because it's probability, right? The successful traders have a system, a rules-based system in place where probability is on their side in the long run. They're gonna have failed trades, they're gonna have winning trades, but the winners outdo the losers and they make money in the long run. You are better off getting stopped out at the low than not getting out at all. But what happens to people sometimes is they got stopped out at this low and they focus. We have, as human beings, we have what's called a recency bias. We always focus on what happened on that last trade. We remember that more than what happened the last 100 trades. So you have your recency bias. You see, oh man, I just got stopped out of this trade at the bottom. This stinks. I just lost this money and then my trade works. Now, next time it's coming down to your stop loss in a different trade, you say, you know what, I got to cancel the stop loss because I don't want to get stopped out of the bottom again. I'm going to give an extra 5 cents. And 5 cents turns into 10 cents. 10 cents turns into $1. And if you have the capital access that we provide to our professional traders, that is extraordinarily dangerous. So you got to be careful. So I mentioned earlier, I actually used to fight professionally. And I actually think that my martial arts background and my kickboxing background actually had a really positive effect for me on my trading. First of all, I'm an extremely competitive person. I had 12-round world title fights from people against the world and, you know, from all over the world. What people from Egypt, China, Eastern Europe, all across the United States, South America. Those people get in the ring and they're trying to kill me. And honestly, I am not the most gifted natural athlete. I have to work really hard. But the thing that I loved about competing in kickboxing, and you know, I stopped. You know, I still love the sport, love training in it. But the thing that I love about professional kickboxing is I always viewed it as the fastest chess game in the world with really high stakes. Those split-second decisions that I was making in the ring, that would oftentimes determine if I would get, you know, I could get knocked out or I could win. Most of the time I won. Otherwise, I wouldn't have been in the sport, to be honest. I didn't need it. Most of the people that I fought against, they did that as their career. My career was being a professional trader, and this was my passion. As many hours as I spend focusing on trading, when I had a fight coming up or when I was in training camp, I was going to the gym before the office. I was going to the gym after the office, you know, twice a day, killing myself on the weekends for it. But it was the strategy of the sport is why I was able to be successful in it. And honestly, I feel like that transferred over. And a lot of the same attributes, the work ethic, the discipline that were required for me to have the success I had in this sport translated over really well into trading. So having a sports background, or, you know, like this says, strategy games, chess, I think that helps. Competition is great for traders. I'm very comfortable with taking on high levels of risk You could speak to me on a day where I am making a tremendous amount of money. You could speak to me on a day when I'm losing a tremendous amount of money. You wouldn't know the difference unless I actually told you how much I was up or down. Because what I've learned a long time ago, and honestly, when I was in my 20s, I had a little more difficulty with this. Had a little more difficulty controlling my emotions trading. It was probably a bigger weakness for me when I was younger. But at this point, I'm so comfortable with risk, and I understand the importance of being even keeled. Every day, if you're going to trade money, you cannot allow outside things to affect it. You cannot allow the fact that your girlfriend just with you to cause you to lose $5,000 trading that next day. That's not a good idea. You got to come in even keeled on a day-to-day basis, a lesson I learned a long time ago. All right, prop trading with T3 Trading Group. Do you want to get involved? Do you want to become a professional trader? Do you want to become a part of my team? You got to do these things. Unfortunately, you have to be, at least at this time, a U.S. resident in order to be a trader. You have to become licensed with an SIE and a Series 57, and you have to pass a background check. You cannot be a convicted felon or declare bankruptcy in the last couple of years during the company. And there's a note here at the bottom, stick to registered. So T3 is licensed, registered, regulated by FINRA and the SEC. I had to do those disclosures at the beginning. I'm a professional trader. I'm pretty sure that it would be illegal for me if I were to tell you that I'm in a position that I'm not in. I think FINRA could come down and fine me. So that in and of itself just grants a tremendous amount of legitimacy to what we're doing here. I believe we're one of the largest, if not the largest, proprietary trading firm in the United States. Our headquarter office is in Manhattan. Again, it's closed right now. Usually I run it along with Scott. Scott and I, we basically sit across from each other at the Manhattan office. We run the trading floor there. It's a really big, awesome space with a beautiful view of the Statue of Liberty in downtown Manhattan. Again, it's been closed all year, so everyone's been working remotely, utilizing the virtual trading floor. It's been going really well. We have a wide array of order routing and clearing options. We have deep expertise in algorithmic and black box trading. We have a whole black box division at the company with the most high-level capabilities basically that exists for HFT and other automated strategies. We have tech support, we have trade support, we have great compliance team. Again, the asset classes, I mentioned this earlier, equities, equity options, futures, options on futures, we have all that. If any of this interests you, reach out to me. I could speak to you about it myself. For equities, we have 3 different software options currently available. I think we actually just onboarded a 4th one. Lightspeed, Sterling Trader Pro, and Wolverine, also known as WEX. Again, routing, we have all of the lit market venues that I was talking about earlier, dark pool access, market making routes, access to floor brokers for certain traders who need that. We have customizable smart routing technology. You can build smart orders into the trading software that we have. So it goes pretty deep. Capital requirements, you need to fund your account with a capital contribution. The amount that you want to come in with to fund your account is for the most part up to you. And typically we start by allocating buying power at 20x for day trading and 8x for overnight positions. You get all the education, everything for free, basically, everything I was talking about earlier, access to my VTF room, access to the training program that I created, daily morning and afternoon meeting. For new traders, it's really important, right? I work with everybody from people who are recent college graduates who honestly don't even know their left foot from their right foot yet about trading, all the way to former fund managers who are, who have been trading professionally for decades. So that training and development is really important if you're at the entry level, but honestly, even my experienced people, I'll have people who have decades of experience take my training program, and especially some of the more advanced classes like on tape reading and routing, they'll say, wow, I really learned a lot from that. I'm glad that I sat through that. And again, for experienced traders, if you want to put $1 million into account because you want access to 20 million for day trading, shouldn't be a problem. Reach out to me. Here's an email address, info@t3trading.com. So feel free to reach out to info@t3trading.com. That email will come to me. That email will come to other members of my team, and either myself directly or a member of my team. I'll get on the phone with you and we'll discuss the specific details of the deal structure of bringing you into the company as a professional trader. So I took over business development for T3 Trading Group, specifically for equities and equity options in late 2019, early 2020. And one of the things that I really focused on when I first started my own trading desk was developing a training program, developing these meetings. And they've come a long way since 2013 when I first started doing it. And we've beefed up all of our support teams, so you can get help from from platform layouts to our trade support team. We have the ProDesk VTF, which you can purchase ProDesk. And again, particularly if you're not from the United States, it's usually when people might purchase it, because you can't have an account with us, unfortunately. So you can't get it for free by having an account with us. But most people in that VTF room, probably 95% of them, are actually professional traders with the company. And you get all this, you get access to all this free stuff if you have an account with us. You get ProDesk room for free. You get my training room, my training program for free. You can get access to Scott for free. You can get his Regular Report newsletter for free, $6,000 per year worth of stuff. Again, the idea here is we just want you to be as successful of a trader as possible. So if you want to inquire about T3, about being a trader with us, first of all, there was an email address earlier, info@t3trading.com. You go to info@t3trading.com. Again, I'll speak to you directly or get a member of my team to speak with you. All right.